What you need to do is you need to get your money together. You need to get your credit. No one's going to give you a loan if you have no credit score or no income. So you need to have money saved up, income, credit, and then you just need to get going. Buy a deal near you, 1 to 2 units. Keep it simple, cash flow positive.
Listen, everybody, we all know that real estate is the most proven way to build wealth. But why isn't everyone wealthy from real estate then? It's hard to know where to start, and most of the education out there is just complete trash, and you end up investing your money on a series of courses instead of in real estate. That's not how this podcast works. We give you the blueprint to successful real estate investing and bring on guests actually willing to share their secrets. I started my real estate investing journey as a freshman in college when I bought my first duplex and have been in the trenches doing deals ever since. And today, I now own hundreds of millions of dollars of investment property. On this podcast, you will learn what you actually need to know to be a successful active or passive real estate investor. And we'll offer our takes on what's happening today so you can navigate this market and build wealth. I'm Drew Breneman, and this is the Breneman Blueprint.
All right. Welcome back to another episode of the Breneman Blueprint. Great to have you here today. So today's episode is going to be about how to do your first deal. How do I do my first deal? It's the number one question I get emailed or direct messaged on LinkedIn or Twitter or wherever. And I think, too, I'm going to start answering just some more listener questions. So if you have a question you want me to answer, just email me or email us really at podcast@breneman.com. And then I'll try to tackle it if it's, I feel like it'll be helpful for everybody. But the number one thing I get asked is, how do I do my first deal? What should I do for my first deal? How do I get started? And the thing is, you just need to go buy a deal. Like, you don't need to overthink this. So step one, this is real estate investing. You need to have money to invest. So if you don't have any money put together or saved up, you're way too premature to be doing this. Even if you could buy a deal with no money down, doesn't matter. You need to have reserves in case something goes wrong. What if you don't find a tenant? What if the roof needs to be replaced? What if all these things could happen? And you need to have reserves as a real estate investor. So even if there's some course or someone guru promising you can buy property with no money down, don't do it. First, you need to get your money together. And if you're familiar with my story, you all know I started an internet business in high school, and I would do the same thing today. The internet business would look a bit different, where those video games I was selling items in, those are not popular anymore. And seems like the new thing is reselling on Amazon, all the Amazon drop shipping stuff, where a lot of times if you buy an item on Amazon, it's not sold by Amazon itself. It's sold from a third-party reseller. So let's say, I just bought a bottle of Windex, so this will be a weird example, but it's the most recent one for me, where it was like $5 on Amazon. So it was like a ripoff kind of, where at Target, you can go and buy that same thing for $2. But it's a third party seller, somebody who's just bought a bunch of Windex and resells them one by one, making a couple bucks on each. And that's the modern day version of that. So if you need an idea for a business to get money together, run with that. There's thousands of people doing that. But what you actually do to save up money doesn't matter. You need to just make sacrifices, hustle, and save. You could take a second job on, clean businesses on the weekends, do anything. But you need to live below your means and be saving up money. Otherwise, you're never going to have enough money to invest in real estate. And step one of any of this is getting money together. There's no person who's going to invest in your deal if you have no experience investing in real estate. And that's just not how it works. You're going to need to develop a track record. If you're asking, how do I get investors and all these things, you're like 5 steps ahead. First, you need to get money saved up and then buy a property. To get it approved for the loan, you need solid income. You need to build up your credit. And so there's some basics you need to have first before you can even buy your deal. You need to have credit. You need to have money saved up. So assuming you have that stuff done, and if you don't, just work on that first. You don't even need to hear the rest of this yet. You need to have money and credit. Otherwise, you're not able to invest in real estate. Assuming you have that, the rest is super simple. You just need to start. It's very simple. For me, I didn't need a lot of I never need to talk to anybody. How do I get started? It seemed like a ridiculous question to me at the time, and it still sort of does. I was in high school. I drove to baseball practice listening to the Carlton Sheets, No Money Down CDs. And even though I just said, don't buy anything with no money down, I was just educating myself. How do these deals work? How do you invest in real estate? What are the different terms and terminology? And now that I know more, I can tell you where to focus if you want. You don't need to listen to the 12 CD real estate education thing. You really just needed two pieces of it to get started. And really, the first thing you need to focus on is how do you value these properties? So assuming you have your credit together, a decent credit score, and you have money saved up for a down payment, you need to keep your first deal extremely simple. Everybody eventually, or not everybody, but a lot of people, most people, someday buy a home for themselves. So like you could obviously do that. That's attainable for you. So start with a single family rental or a duplex or maybe a 3-unit. Don't get more complicated than that. It doesn't need to be. Your first deal, it's with your own money. The deal should be cash flow positive and keep it simple. So it should be near where you live. Like, just don't make anything complicated. Cash flow positive, near where you live. I don't care where you live. Just it's important that you understand the area and can get to the property if there's an emergency. So no excuses on where you live. You can make money in any city. There's good deals in bad markets. There's good deals in bad cities. There's good deals everywhere. So first step, understand how to value properties. Most small properties are going to be valued by the gross rent multiplier, and that's very easy to use. So you want to find out what is, find a broker, find a realtor who they understand investment property. And how you can figure out if they know anything about investment property is you can ask how many deals like that they've worked on, if they own any investment property themselves, and then ask them what gross rent multipliers, what's a gross rent multiplier in today's market for this property. And if they can't give just a straight answer, they're not the broker for you. The person that I used in Madison, Wisconsin, when I was getting going for the type of property I was buying, I asked him and he said 10. There wasn't any hesitation. He was confident. That's what people are paying, 10 GRMs for this size property in that part of downtown Madison. So we just started going. It was not more complicated than that, and I bought the first deal that made sense in terms of the gross rent multiplier, and was cash flow positive. So how does the gross rent multiplier look? You don't really need me or a course or anything for that. You can just Google that or, go download our passive investing guidebook. That's in there, explaining that term as well as a bunch of other stuff. But real simply, you just take the annual income, or I guess more strictly, if it's a gross rent multiplier, the annual apartment rent, multiply that by the gross rent multiplier, and that's the property value. So what you're doing on your first deal is you want to just make sure you're not overpaying on a gross rent multiplier basis. So if your realtor says this is a 10 GRM market and a building brings in $100,000 a year of income, you multiply that by 10. Obviously, that's $1 million building, but they're asking $1.3 million. That's not a good deal. So what you're doing is you're hanging out, you're waiting till you see one where the price is $950 or $1 million, or it actually makes sense on a gross rent multiplier basis. And then don't overcomplicate things. It's time to make a move and buy. So that's it. If you're in a market where cap rate is more common, that's an easy thing to understand as well. It's a little more complicated because it factors in expenses, but that's just income minus expenses equals your net operating income divided by your cap rate equals the property value. So in that, you're going to need to understand what's common for expenses when underwriting. So there's an additional wrinkle there. But either way, you're going to want to see if your property's how much it makes per month on a cash flow basis. So you're going to have that expense info. You're going to have figured that out. So if you're in a cap rate market, don't be afraid to use that as well. It's not that complicated. It's your own money. I'd highly recommend on your first deal, find something that's cash flow positive. I think I've already said that like 4 times on this episode here, but my mindset on my first deal was I'm paying this 10 GRM or whatever. I might be totally messing up. Maybe this is like a bad block or there's something I don't understand about how people value these. But I was really confident in what I could get for the rents and what my expenses would be. I spent a lot of time looking. This before before the apartments were listed online. So I spent a lot of time looking at the apartment rental books and calling other properties for rent nearby and figuring out what those rents were. Today, it's easier. You can just go on Zillow or these other websites and see what everybody's asking. I guess keep in mind those are ask rents. So ideally, you'll want to see those eventually renting too, versus not just everyone asking a price. But you get your income dialed in, then figure out your expenses, property taxes, get an insurance agent, get an insurance quote, figure out how to look up your utilities, start figuring out how to determine all the expenses so you can figure out your cash flow. None of this requires any special skill, though, about real estate investing. Anybody can talk to their assessor or county treasurer and figure out how our property tax is calculated. How is this bill determined? What's going to happen for the bill next year? Anybody can get an insurance agent. And then anyone can call the utility company and ask what were the utility bills in the past. And you're just going to string together these things. And then what do repairs and maintenance cost? That's going to be an estimate. But just for now, just assume, what I do generally is $1,000 a unit a year. You're buying a smaller deal, just go higher. Just put in $2,500 a year or something. And just as a placeholder, things will go wrong. There'll be repairs. And then what else is left? Apartment turnover expense. When people move out, you're going to have to paint and clean the unit. And then you're going to have your recurring sort of services like landscaping, or depending on where you are in the country, pest control or snow removal. And that's pretty much it. A lot of people like to have an additional line item expense for CapEx, on just sort of a $250 a year type thing. And once you do this longer, you realize $250 is not enough, but $250 a year per unit for the CapEx type items. So roof, water heaters, furnaces going out, air conditioners, that sort of thing. But even right now, I'm getting way too in the weeds. This is more info than you need. What you need to do is you need to get your money together. You need to get your credit. No one's going to give you a loan if you have no credit score or no income. So you need to have money saved up, income, credit, and then you just need to get going. Buy a deal near you, 1 to 2 units. Keep it simple, cash flow positive. For the GRM, your realtor is telling you. And then also, don't just rely on your realtor. Look at comps. So things will sell while you're looking. And then let's say you see what the rents were on this deal for sale, because most of these rental properties already have tenants in them. And then what was the price? And then look at the GRMs for actual deals sold. And that should give you all the confidence in the world to move forward. You need to be willing to take risks. You're never going to get ahead. You don't take any chances. So you're going to need to take a risk, and you already have the money, the credit, all the tools you need. You just now need to go, and you're going to learn. And the other thing is there's a million other things you could talk about on how to invest in real estate, but you're going to learn so much on your first deal or two. It's not even worth learning more, in my opinion, than how to value the property. And then you just need to get going. You're going to have your realtor, you're going to have your attorney, you're going to have your lender. They can guide you through the transaction and get it to a close. So don't worry about all the little details like, oh, how do I do a survey or title or review this contract? Don't worry about any of that. Rely on the professionals. You just need to make sure this thing makes money every month, and because then your worst case, you just hold the thing. And then it makes money every month, and you just sit on it till the value catches up. So that's not the ideal scenario, but just that's sort of your worst case scenario is you screwed up on valuing the property. You overpaid somehow, even though you had your realtor and your lender looking at it and you were looking at comps. But let's say that happens, well, fine. Then you have to sit on the property and let the value catch up over time. But meanwhile, you're making money every month on the net income of the property. So I realize it's like there's not much tactical. Hey, this is what you need to do. This, because it's simple. You just need to start. You just need to get going. No one told me go listen to this Carlton Sheets thing. No one told me go. These are the steps to buy the property. I had the money from the internet business and I wanted to buy a property. So I bought it. It's not more complicated than that. Go buy the property. So hope you enjoyed that little Q&A there. So if you have more questions, just send them in, podcast@breneman.com. I'm going to try to do this more often, get to some listener questions. It's been interesting seeing what people send me, and then this will be a way to just kind of tackle more at once. So thanks again for listening, and we'll catch you on the next episode.
If you learned something from today's show, leave a review and hit that subscribe button wherever you enjoy your podcasts. Dive deeper into real estate investing on Breneman Capital's website, breneman.com, where we have numerous free resources and information that can help both active and passive real estate investors. Accredited investors can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Breneman Capital LLC and its subsidiaries. Views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities. The speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.